Hello, YouTube. The NASDAQ is now closed for 1, 2, 3, 4, 5 green days in a row. We are starting to climb the wall of worry, and we now have 2 consecutive daily closes over our 50-day moving average or the short-term price. So we want to ask ourselves whether or not there are legs to this rally, whether the bulls have won. And yes, I know that might be a little bit controversial. I did that on purpose. So let's switch back to full candles, but keep in mind that this red candle is actually a day where we closed higher than the previous session. So the reason why this is important is because when we look objectively to our chart, it is hard to say that we're not going up. As of right now, it looks like we're pointing up. We had an increase in volume as well, which is confirming the move. Is it a very high amount of volume? No, but it's probably enough. We look here to the dollar took a notable tick down on the daily chart. Death cross. Yes, that's right, a death cross. Then we look to the VIX. Oh my goodness, down by double digits. That's right. Volatility is now getting flushed out. We look here to the 2-year note, also pointing down. Cool. All right, looking to the 10-year note, also pointing down. So I heard a lot of commentary on Wall Street today about how don't fight the bond market, and when bonds point down, it means stonks go up. So that's basically what I want to go through today. A few more quick things are just that gold is up by 1.3%. Bitcoin is up by 5%. Ethereum is up by 3%, basically. Reclaiming some key areas, going all the way back to 2017 highs. Look at that. Look at Ethereum flex. We can also note that we got the Dow up. Let's look back here to our daily chart. All right, Golden Cross going higher. Nice. RSP, or equal weight S&P 500. Golden Cross going higher. New York Stock Exchange, Golden Cross going higher. Are you noticing the pattern yet? Looking here to IWM. It'll probably get a golden cross sometime soon, maybe in a couple of weeks. It's over both averages. Nice. XLF, golden cross above both. All right. Looking here to XLV. Well, golden cross, we're not above both. Healthcare has been a huge, huge winner. It's pretty close to the all-time highs. It just looks like there's some coming off some of the froth coming out here. For me, it looks like a massive cup and handle. That's what I'm noticing. Moving forward here to XLE. Oh, above both. No golden cross because it got this golden cross all the way back here in 2020. Moving forward to one more, XLU above both. Nice. Looking here to XLK above the 50. This is the laggard, and the reason why we're focusing on tech right now. We can look here to ARC. Also above the 50 for the first day. It is poking up off of a key area that what? Whoa, we're back above the 2020 low. That is right. There is snapback potential. Keyword being potential. All right, let's go further. What else do we got here? All right, we got FXI. Well, above both. And this is rocking higher here for what? A golden cross. Looking here to EEM. Same note. Rocking higher on that 50. Golden cross is incoming. And why are we spending so much time looking at all these charts? Because it's really important to remember that the CPI print that we got this morning is not able to get traded by people who trade China, people who trade Europe for the most part. They have to vote and see what they are willing to do going into it. So let's look here. Wow. Well, it's basically straight up. That's emerging markets as a whole. Let's look to China or FXI. Whoa, up and then up more. That's right. And then let's look to the DAX, Germany. Whoa, what's going on here? Golden cross. And yes, we are going higher. So it's really interesting just to note that it's up, 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 and more up. Why would this happen? I might have forgotten earlier, so if you haven't already, I would really appreciate if you could smash that thumbs up, please, and thank you. I believe, not I know, again, I believe that it's because people are underexposed. People thought the first half of the year was going to be very bad, myself included. The problem is these guys are not nimble. They have a big, fat wad, which means it's very hard for them to get in and then out. And a lot of people have been selling into this rip, including Mike Wilson over at Morgan Stanley has been saying that 3,900 is an easy sell. Well, we're basically up here at 4,000. That's like a really, really important number. So we'll look at a few more charts, but I think you get the story. And I'll actually show you a couple more here just because I think it's important now. Let's go to two boards. Let's look here to, let's go to the one on the left here first. This is going to be the E-mini futures, one we talked about yesterday, where we're what? We're breaking that downtrend. That's right. I've actually added a green line here because we have an uptrend on the daily and we got bullish volume. I'm also now going to actually do something I didn't think I was actually going to do, but we're going to invalidate that head and shoulders now. Why? because it's no longer valid. It looks like we're more forming a cup with a potential handle, and then we could what? Go higher. Again, nothing is confirmed, nothing is a guarantee, but we are now over our 200 DMA, which is going to be the black number here at 3991. Just look at it again. Again, we're now closing above it for 1 day. 2 days would be tomorrow, and tomorrow is going to be Friday, pretty sure. Yeah, tomorrow should be Friday. So paying close attention to Friday's close tomorrow, and we're above the 200 for 1 day. Let's see if we can get 2. Also, we weren't able to spend more than 2 days closing above the downtrend before. Now we're set for 2 so far. Oh my goodness. Is this it? Are we finally beating that nasty bear after over a year? It appears like it. And what I would really note is that we didn't even come all the way back down to test our 50 DMA today. We pretty much just tested the Monday high on that CPI knee jerk. So if you now look here to our second chart, this is the 1 hour chart, looking at the same thing here basically. 38.55 is going to be the median price paid since October 10th, or the low of the year from 2022, but also from December 16th when they started accumulating. Why does this matter, Justin? Well, because we know here that we have an uptrend, and I was actually quite surprised every time we crash to it, right? Recover, power up over the previous high, and then what do? Power up again, flag out overnight. There's the knee jerk on CPI, bounce off the 50, bounce off the VWAP, bounce off the VWAP. So as I get closer here, that's a nice bounce. That's a nice bounce. That's a nice bounce. And biggest green bar in the day, right? Biggest bar in the day is green. What about yesterday? Biggest bar in the day is green. Before that, biggest bar in the day is green. What about Monday? Here we got 253,000 volume. Here we got 2536. Oh my goodness. Oh my goodness. The green one is bigger. That's right. So the bulls have been accumulating, and now because we're basically here at 4,000, if they've decided to sell, they're not really selling all that much because we're right back here at 4,000. Oh my goodness. And we're above that 200 DMA. But S&P is not quite cleared it yet. So we're still digesting this area, and we're going to have to get over it on 2 daily candle closes and then really get above about 400 and really 405 to start confirming this move. But let's have a look at one more thing here. And I'm just trying to show you a lot of evidence because I think people are going to be very skeptical, and we'll talk about the reasons why in a moment here. So we're going to look at SPY. We're looking at the 1 week chart and our high of the week. Let's look right here really close. Oh my OMFG 39849. What was the Fibonacci level we were talking about? 39848. It seems like math is at play here. So if math is at play and we're now breaking the 1 day chart on E-mini futures, all it would take is for us to break that 50 weekly, which is pretty much our downtrend now. And then where can we go? Well, we can go to 415. And remember, at 417, we birth a new bull market. One more time, at 417, we birth a new bull market. That will be 20% off the lows. Are you going to believe it if it happens? So if we go up by roughly 20% off the bottom, that takes us to roughly 417, 418. So are you ready for it? Let's zoom out for one more chart here because this is the part where I think a lot of people are struggling. We're currently up by about 3.8% on the year. Again, most of the markets are a lot higher. Emerging markets, DAX, Germany, right? We also have China. They're up a lot more. But the S&P normally returns about 10% per year. And we're only into the first half of the first month, and we're already up by a third of the gains. We're basically where we need to be by the end of the first quarter in 2.5 more months. Whoa. That's like pretty impressive. It is pretty impressive. I'm impressed. I've been a pretty big bear, but I'm receptive to the price action. And when we weren't able to really get a big slam, we're actually building up pressure up into here. Have to be aware of it. So the way I'm trying to understand this this headline today is that this is a let's look at the next headline here first. This goes back here to January 6th, which is only a week ago. Goldilocks makes an appearance in the jobs market. It's neither too hot nor too cold, with the economy continuing to create jobs while wage pressure eases. That's what I'm seeing here today. This is a Goldilocks recipe where core is going up by higher than the previous period, 0.3 versus 0.2. CPI in a month over month, it's negative, 0.1. CPI coming in line, but below 7. Initial jobless claims, that doesn't seem to be the focus anymore. Cool. So Goldilocks is here. And what is so interesting about this is that yesterday we talked about how U.S. financial conditions actually ease for the first time going back to April. Why does that matter? Well, because The Fed funds rate right now is now implying no higher than 5%. 4.99 is now the terminal rate, according to the bond market. And then we start cutting into 2023 and then cutting into 2024. So who was out there talking today? Well, we heard from Bullard, Harker, and Barkin. And if we look here, this is the cheat sheet for hawks versus doves. The further down we go and the more red it gets, the more hawkish they are. So some of the most hawkish members of the Fed spoke today, and there was no real headlines. The reaction is that we're closing green. We're up by 2.2% on the week. NASDAQ is up by how much here? Up by 3.8%. Whoa. Yeah, that's right. Whoa. Fed swaps show less than 50 basis points combined for February and March now. And they all talked up the 25 basis point hikes. 25 basis point hikes, sorry. So now with the focus going to the Fed on February 1st and Jerome, what we really have to focus on tomorrow is going to be earnings. We're going to hear from United Health, one of the biggest companies in the S&P. We got Bank of America, JP Morgan, Delta, Citi, Wells Fargo, BlackRock. And then it really gets into the thick of it next week and then really after about 2 weeks from now. So the market wants to focus on that going forward. The emotional roller coaster of an investor. Pause the video if you want. I want to focus on this part here, right? Lucky I sold everything at the bottom. It will still fall as it goes higher. What did I say? What is going on here? I knew all along that it would recover. Whatever, I will buy again. Anyways, it is cheaper than I thought last time, right? That's where we probably are. People are like, man, WTF, what's going on? What's going on here? Yeah, that's right. And this is what the QQQ and S&P look like on the daily chart. Starting to form that dub. And we're only about right here. But greed is starting to make its appearance here in the market. Are we going to go further into greed? Are we going to fall back into neutral? Let's pay attention. It's really important for me. Last thing to look at here for a little bit of evidence, we're looking at dark pool prints for the SPY going back about 3 weeks. And I just want to look at one thing here. We're going to look at levels. And I asked our group what this meant to them today. And I think people are a little bit confused on how to read this. So the way that I read it is that these are large privately negotiated transactions. It just means orders are going through from smart money is the way I look at it. So if you zoom in really close here, there's not really that many levels. We're looking for at least 1% of the daily volume of 83 million shares. So what this means is that they were swapping or accumulating a 390, accumulating a 390, 390 again. And now they're just accumulating a little bit, which means they're building up support. Everyone's made money who's dark pool printed. If they've shorted it, they've lost. If they've sold, we're now higher than where they sold. And if they've bought, they're making money. So that's like constructive. It's constructive. The same thing shows up on QQQ. And it's part of the reasons why I'm so bullish. So if you're interested in joining me, Justin from YouTube tomorrow, we're going to have a live stream for the final hour and ask ourselves whether the bears are trapped. If not, thank you for watching. I look forward to seeing you tomorrow. Thank you.